now.
Good evening, everyone. In today's presentation, I will be talking about swing trading and how you too can swing into profits trading only 10 minutes a day. And if you think this is too good to be true, well, think again, because this is what I do every day. And this is what I have been doing for a very long time. We're also going to talk a lot about charts today. All right, so before we continue, take a quick second and review the risk disclaimer. Basically, what we're telling you guys here is that TradeOutLoud is offering this webinar for educational purpose only. Now, what do we want to do and why are we all here tonight? And, every time when we, sit down and every time when we look at some charts, every time when we try to invest in ourselves, invest in our trading education, try to figure out technical analysis, try to figure out entry points, how to play stops so we don't stop out as often, how to place trail stops, whether it is for options trading, whether it's for, swing trading common, whether it is for day trading, whatever it is, we want to take control of our financial future, right? Because of everything that is going on around us. We have a lot of inflation happening. We have a lot of things that are, kind of bizarre happening. So we want to take control of our financial future. We want to be financially independent, even if you have a full-time job, or even if you have a part-time job. This is something that you can do. Swing trading is something that you can do from the comfort of your home and only spend about 10 minutes per day. And this is how you make your money work for you. Now, in yesterday's presentation, I did talk a little bit about creating a particular ecosystem, your personal financial ecosystem, where you can actually generate the income and you can create your wealth through swing trading and active investing. Well, in today's presentation, I will dedicate more time into the specifics of swing trading and how we can get there together. For those of you that are new and do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and actively invest in any kind of market, not only equities and futures, but any kind of market, even in cryptos. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I also run a swing trading service for stocks and ETFs since 2010. You can see our transparent portfolio, performance portfolio on our website, and I also run a trading room for futures that I have created in 2017. And this is for income generating. The swing trading service and the investing service is for wealth generation, is where you make your money work for you. We do offer trading education for swing trading and day trading, and also for investing. I focus on high velocity trades. And what that means is that I look for inflection points where on the technical chart, I like to get in and I like to see the price move in my direction. My accuracy is about 80% or 82% this year. And again, this is a relatively super hard year, and it was a very hard year to trade, and definitely it was challenging. The methodology that I use is applicable in any kind of market environment. I have been trading for a very long time, and yes, I have traded the dot-com bubble. I have traded the financial crisis in 2008. I was back then a day trader, a swing trader, and an investor. I've also traded the pandemic. Nobody else that is alive today has ever traded the pandemic. But hey, those of us that are around, those of you that have heard many of the traders present today, we survived the pandemic and the price action of the pandemic. All right, so the methodology that I use is based on price support resistance, but there's a catch because I use inflection points, and an inflection point in a confluence area is a specific zone on a technical chart that has multiple levels of support resistance collide. I use 8 layers of price support resistance that provide me with that accuracy. And if you're thinking I'm doing a lot of work on charts, no, I'm not. It's actually super simple to trace these levels, but all you need to do is learn how they're done. And we're going to be analyzing some charts today, and you will see how easy it is to have your work, have the work done. I also use specific trigger times, specific price zones, because there are 4 specific price zones for trade initiations, and especially for hedge funds or institutions where they leg in, because institutions cannot buy like I'm buying from my house, let's say 1,500 shares of Bank of America, or if I'm buying 300 shares of FedEx. Institutions buy a lot, the millions, so they need to scale in and they need to scale out. And these are the specific price zones that we teach in our courses. I also focus on chart synchronicity and divergency. I also offer I trade through a strict set of trading rules, and I use a 10-point scoring system. The scoring system allows me and allows my students to identify trades with these. So it's a scorecard that you have to literally check all the boxes on before you take a trade. The more boxes you have, and if you have all the boxes checked, then yes, you could take the trade. And that means you're going to have 80% chances of success in that trade. If you have 50% of the boxes that are checked, that means that that trade is not a good trade. That means that that trade, you have the risk of making money, 50%, but you have 50% chances of stopping out. Okay. Also, like I said yesterday, TradeOutLoud has been named Benzinga's overall winner in the best financial literacy tool category out of 400 financial companies, revolutionizing the fintech industry. And this is because of our performance and because of the services that we offer and the education. I'm also the winner of the trading battles in 2021 and 2022. These are live trading challenges. Let's get started, everyone, right? Okay, so here you have a really fun chart, right? And this is a pennant, right? This is a pennant. And you pretty much, kind of like assess the pennant, and you have to choose very wisely. Why do you have to choose wisely? Because one wrong move and, well, it's McDonald's dinner, but one right move and you're going towards the Lamborghini. You have to follow dominant trends. And in order to go for the Lamborghinis or the Ferraris of the trades, you have to go with the dominant trend. Remember this, an object in motion tends to stay in motion. So let me explain how that works. For example, if you have an uptrend and you have a stock that is moving higher, I don't know, from the top of my head, I'm thinking of Eli Lilly. Eli Lilly has been super strong last year. This year has a massive consolidation into the top. And because it has that massive consolidation, we're going to talk about that chart in just a little while. Because it has that massive consolidation into the top, what is the next possible outcome? To continue higher, to continue into that Lamborghini setup, if you will. So it's very important the way you approach trading, not only how you use your technicals, but also how you measure your risk. Because if you take the trade without having proper position sizing based on your account size, based on your risk tolerance, then guess what? You may risk very little in a trade that has chances of working out beautifully in the Lamborghini or Ferrari category. But however, some traders, what they do is they apply a huge amount of risk, and guess what? They blow up their accounts because you don't apply this, they don't apply the same risk on all of their trades. Okay, so for those of you that want to find out more about TradeOutLoud, you can go to TradeOutLoud.com. Oops, sorry about that. Ooh, what did I do here? Okay, hold on just a second. All right, here we go. Okay, so here's my agenda for tonight. But before we continue, I just want to ask really quickly in here, how many of you guys are swing trading already? Type a 1 in the chat box if you guys are already swing trading stocks or Forex or cryptos or futures or whatever it is, just let me know, guys. How many of you guys, not a lot of traders, only 2 swing traders, 3 swing traders. Okay. Okay. All right. Options. That's perfect. You apply the same strategy for options that you do for swing trading. And again, options, if you love to trade options, I don't trade a lot of options, but I do trade, some options. But if you want to trade options, this would be like a good vehicle, to take a trade, for example, as you're going into a runner up into earnings or something like that, or a runner down, depending on what stock you're trading. Okay, so I see that we have a full room here, but not a lot of traders are swing traders, right? So I'm going to dedicate a little bit of time into getting a little bit into swing trading. You can, once you learn how to swing trade, you can swing trade anything on the planet. So these concepts that I'm going to share with you guys tonight, you can apply for micros, for full size and futures. You can apply for stocks. You can apply for futures. You can apply for anything that moves. Okay. All right. So let's talk about swing trading. The other topic that I have prepared for you is swing trading right for you? Do you have the risk tolerance, right? Because when you swing trade, you have to take off your day trader's hat. You want to focus more on higher time frames. And also, we're going to be talking about the reason why I love swing trading. Everybody knows in my trading room, I run a very successful day trading room. And sometimes, I tell my traders in the trading room, like, guys, I love day trading, but you know what I love most? Swing trading. The reason for that is because you don't have to spend more than 10 minutes a day in front of the computer. For example, today in the trading room, my goodness, we were there until 12 o'clock. And I know, I can't complain because we're making literally, a big fuss if we have to spend more than 1 hour in the trading room. But sometimes you have days like today where the market was not so generous and was not in a continuation pattern. And the reason for that is because we're getting closer and closer to option expiration. And this is normal price action behavior as we're getting closer to option expiration, which is on Friday. All right, so let's get back on topic. And how to spot opportunities in any market conditions? Would you like to spot opportunities in any market condition? Right? I would, right? Okay, so before we continue, I just want to show you something very quickly. Okay, so I don't know. Let's see if I can. All right, let me just share this. Okay. All right, do you guys see this chart right here? Do you guys see the chart? Just want to make sure you guys can see it. You never know with Zoom. Never know with Zoom. Okay, cool. All right, cool. This is a chart of the SPYs. All right, so back in October, okay, we saw an inflection point that was about to happen around the 350 area. It was just a little bit above this this horizontal line. And we saw this inflection point, and I was, telling the traders in my trading room and telling my swing traders that we're just above to see some kind of a rotational pattern. The reason for that is that the volume was increasing, and we had a lot of taps into the $350 support zone. We had a prior support into the 360, and now into this 350. We had that huge band of support. That was actually the last, and the tail actually went into the last band of support and tapped it exactly to the T. And we were watching it here, and I kept on telling my traders that, hey, you know what's going to happen here, because we have this consolidation that has been going on. And by the way, this is a daily chart. We had this has been going on for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We have been testing this area. This is a relatively long period of time for price action to test a specific area. So what we saw here was that inflection. We also saw here that the day that the price took off, it was October 13. We had the same velocity and the price came back down. If you see this purple line right here, this is exactly into the prior support from October 3rd. This is the exact support from October 11th, from October 12th. And this is exactly where we landed. And I said, this is going to be a very aggressive buy here. Nobody was thinking of buying here. Nobody was thinking of buying here. But guess what? We kept on going long, long, long. And in fact, all this period of time here, even in the trading room for day trading, we were long. And in the active swing trader, actually, we only had long positions. We only had long positions. And in fact, you could view the performance portfolio. It's on our website. All right, so now we had the pullback, and at the moment of this pullback, I said, this is the first time that we're breaking above the trend. And if we get a rotation here, the price is going to go higher. And I had specific targets. Now, should you believe me? Well, I don't know, but this is actually our private Twitter feed where I post updates. This update in particular, let me just zoom it out. Let me see if I can see it here. All right, this was sent on November 7th. Okay, this was sent on November 7th. Take a look at the targets that we have over here. I told everybody that this is going to be a decision area, and if we break out and if we pull back, we're going to be taking off. This is going to be a rich target area. This is called a rich target area because it's a confluence level, this dotted line right here. And then if we snap above this 290, we're going to go to 399.50. That's it, 399.50, right? Do you guys want to see something else? Well, this today, or I don't know when, let me just check. Okay, it was yesterday. Oops, let me show you this. Do you guys see this? Yesterday I said this. SPY is positioned strong from last week, neutral ahead of the open. This was yesterday's open. If it's going to trade above 399.50 to 400, it can start moving towards a target of 405. This was yesterday. All right, this is it. Now, let's see where it went today. It went to a target. It went into the price of 403.50, very close to target, right? Very close to target. So you can see the system that by which we're analyzing these trades is not very sophisticated, right? It's not very sophisticated, but I want to show you something else. I want to show you the potential here that we have. So like I said, we reached this I think it was 403. See the high, 402.30. Yeah, 402.30. Okay, so what I wanted to show you guys is something that is very interesting. We still have room a little bit to the upside before a rotation may happen and may push the price lower. So we had the top, we had the lower high, continuous lower lows right here. And then we have the price right here. Now here's what's about to happen. We're reaching a decision point. A decision point is coming from the price. First of all, it's coming from the fact that we're having a doji candle. Let me zoom it in a little bit so you guys can see it. This is a doji candle. This doji candle it's actually very simplistic in its approach. This candle represents indecision, but their indecision is our decision, because guess what? If tomorrow we're going to get above this 403.50 that we tapped onto today, we're going to be bullish above. If we break below 394.50, we're going to be bearish below. We're going to be bearish below to approximately 390. And from 390, we're going to be bullish back again, going back into the 403. Now, remember that price action may not be true to value, may not be true to technicals as we're approaching Friday because of option expiration. But I want to share with you guys one more chart, FCX. And if you could go to our portfolio, oops, not this one, FDX. If you could go to our portfolio, you will see this is a very interesting chart. When you speak and when you learn how to interpret, you know how to read into charts, you're going to have a whole different world that is going to unlock in front of you. First of all, I use just few moving averages, but I use the moving averages that really matter for trading and really matter because a lot of institutions are using them. They're algorithmic rich areas because they are easily programmable for a lot of factors. And I use a combination of these very simple indicators that you can find on any platform for free. And what else I do, I read price action, and I'm very good into patterns. Patterns work, and the reason why they work is because they're also algorithmic rich areas based upon the locations where they trigger and based upon the price behavior into that location. So here, as you can see, we had a move down, right? Now, if you look on the daily chart, it's actually, if you look on the daily chart here, let me just take this off, you're actually going to be able to see a gap down, right? So it had earnings, it gapped down, it flurried down a little bit, and then it consolidated. I love this consolidation right here. The reason why this stock started to pop despite anything that we have been that literally was pre-established following the earnings, right, was the technical component. And the technical component was the massive pullback that it had into the 200 SMA. Do you guys recognize something here onto this chart? Look at the price action. The price action is following the 200 SMA. Now, back in 2020, and this is in March 2020, this is the pandemic, this was a massive consolidation as well. We also capitalized on FTX because if you recall, there were a lot of deliveries and everybody was buying online. So it was very normal for FTX to move higher. Transfers were very high back then. And typically NASDAQ stocks were very strong, right? There were very few stocks that were affected within NASDAQ. Semiconductors were strong, everything was strong, computers were strong, computer industry was very strong, everything was very strong. Now, what else do you notice on this chart? If you go back and if you follow this 200 SMA, you can see that this stock is in love with the 200 simple moving average. And in fact, you see another tap over here, another tap over here. And throughout time, as long as we could go back in time, and in fact, this is 1996 right here, at certain inflection points and at certain moments of crisis into the market, whether it was, the 2008 financial crisis, this is the financial crisis. This is the pullback that we had into election in 2016. This is the 2016 pop-up. This is actually the 2020 low right here. This is the top into the 2021, and this is the pullback that we're having right now into this inflation bubble, right? So every time it was, and this chart is so representative for the fact that it reacted. So our entry in FTX was 154. We bought it at $154. Here it is. This is where we bought it. And now if you look, so let me just trace it for you guys here. So 154, I'm just going to put it right here. Okay. And into these highs. So you guys see it, 16% gain, $24.89 into this high. We still have target because from the technical standpoint, we still have room to about 180 and 190. And yes, we have nothing but patience. Now, how much time do I really need to manage this trade? I just need to look at it probably for a second, or let's say a minute at the most, right? That's all I need to do. And by the way, I haven't taken a lot of trades. I don't know why my mouse is just stuck. But I didn't take a lot of trades in November. I added into my FDX and I added it at $160. So you can see from 160 to 176, I'm in the plus $16 again into this trade. So I traded first. I still have those shares available and I added to this trade. I'm adding as the price is going for me. This is called a pyramid. This is pyramid trading, right? You're adding and reducing, adding and reducing. All right. The other trade that I have going on, for example, is Micron, right? Micron, we picked up beginning of November 2nd. These are just some few examples at $55.50. This is $55.50. This is right here, 55. Let me just go 55. Here it is. And 20 cents. This is where we picked it up, right? So this is how the stock is evolving right now. So it's trading at and had a high today of $64.44. So don't think that we're complacent and say, oh, you know what? We're just looking at it a minute and then, I'm going back to sleep, or I'm not going to be opening my account for the next 3 days. No, I'm very diligent in trailing. And if I need to see, clear signs of topping before we actually trail the trade, because we have a system where we trail the trade so we don't give back profits. Another trade that we took was FCX. This is a phenomenal trade. We picked it up at $30.20. Yes, that's right, at $30.20. You can see my cursor right here. So we made a lot of money in this trade. Like I said, less is more when it comes to this kind of market environment. So if you're looking right here, we have over 32% into this trade as a gain. And not only that, but it's setting up a bull flag formation. So guess what? If tomorrow the price is going to get over $38.70, the price is going to start continuing higher. However, if the price is going to trade below $37, we're going to be out. Why? Because we already made like $7 in this trade, right? All right, so I just want to give you a quick example of how you analyze, trades, and how you look at the charts, and some of the trades that we did this month, and we did last month, and our portfolio is up for the year. So that is what's most important, because look, it was not a swing trading year. It was a phenomenal year for day trading again. And it was not a great year for swing trading because you didn't have a lot of price oscillation, and the price action was reacting very chaotically. All right, so I was mentioning that swing trading is easier. Yes, it is. It's the easiest way to make money because you are not going to allocate a lot of your time and effort into finding and applying strategies to trading. But there's a catch. You need to know and to respect the rules of the game, and you need to be very patient to wait for setup. So for example, the last time I called the trade was on November 2nd. So I didn't take any trades last week, and that is because of the election. But guess what? I didn't have to take any trades last week because we already had beautiful runners. And by the way, we had trades in MRO, we had trades in Lulu, we had trades in Bank of America, we had trades in Microsoft and AVGO and NVIDIA, etc. So we had our money working for us. We didn't have to go compulsively and trade and try to find new trades. All we had to do last week and even this week was to manage the existing trades, because when it comes to this kind of market environment, less is more. All right, so for those of you that are not familiar with swing trading, regardless of whether you want to trade futures, full size, or micros, there was a question in here, or whether you want to trade stocks, or whether you want to trade Forex, or whatever your preferred instrument is, you can swing trade and you can actually invest if that is your preference. Now, swing trading is the sweet spot between day trading and position trading. So it generates a high probability trades, and it offers the best chances of success, best return on your investment. Swing trading positions will be held from 2 days to a couple of weeks. And what makes me laugh so hard is when traders are saying that, I swing trade, but I'm holding it for a very long time, and I'm holding it for a week. And I'm like, guys, you don't have like the basic concept. So swing trading is when you hold a position from 2 days to a couple of weeks, period. Anything that is held more than a couple of weeks goes into the investing category. So swing trading is focused more on higher time frames, such as the 1 hour, 4 hour daily charts and weekly charts. These are your homework charts, and one of these charts will represent your executional chart. Because in order for you to come to the conclusion to buy or to sell or to trail, you need to see where the setup is forming, because sometimes you're having a setup that is forming on the weekly, sometimes you're having a setup that is forming on the daily. The chart is going to tell you where it's setting up. And of course, position trading, which is long-term. This is investing where positions are held from few months to few years and sometimes decades. For example, I have stocks that I have been in for a very long time, even before 2000. Swing trading focuses, like I said, on the higher time frames. It focuses on position trading, focuses on weekly charts, monthly charts, quarterly charts, and yes, even annual charts. Swing trading and investing captures a portion of the swing from high to low. So basically, when you have a trade and when you're looking, for example, to initiate a trade, I'm going to just use this example right here. So you're not focusing on catching the very bottom, because it is impossible to catch the exact bottom or to take profit at the very high. It is impossible, but you're focusing on the sweet spot, right? So you're focusing, you can see where I have, where I have my entry. And right now this trade is still ongoing, but I have a management plan in place at $37, right? So basically what I'm trying to say is that when you're swing trading, you're trying to capitalize on the sweet spot, right? On the core of the trade. Okay. Can you guys see my chart right now? Can you guys see my screen? Sorry. Okay. Yes, I verified it. Okay. Swing trading is not about capturing the entire trend. It's all about finding the best possible entry opportunity and profiting from the stock's momentum, move up or down, and not living through reversals. Like, do you think I'm going to live through a reversal in the FedEx or in FCX? No, I'm trading as long as the momentum is ongoing. I'm going to be in the trade. At the first sign of the trade reversal, guess what? I am going to exit the trade. So swing trading is a simple strategy where you enter a trade when the price breaks above a pullback reversal pattern or breaks above the range. The key is to know how to enter an upswing or downswing and identifying the sweet spot, banking the profits before the market turns around. Elements of the trades these are the most important elements of the trades are the entries, the stop, the targets, and share sizing. Share sizing is very, 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 very important. Okay, so who is swing trading for? Well, I know it's for me. And in a couple of years, I think that, hey, you know what? Probably I'm going to be tired of just, day trading, and I want to have more time for myself. So I'm just going to navigate quickly and swiftly towards swing trading. Why? Because I don't have to be in front of the computer, even those 2 to 3 hours that I have to do every single day. So who is swing trading for? Traders with busy lifestyle that want to manage their own long-term money or trading accounts. Also, part-time traders that do not want to sit in front of the computer all day. Hands up, right? So raise a hand, guys. Raise a hand if you don't want to be glued to the computer, because I have both hands in the air right now. Swing trading is a wealth generation style of trading, just like investing, right? Because this is money that you're not going to need immediately. So you're not going to need it today. With day trading, for example, I pull my money out every single month, right? But if I want to pull my profits out at the end of each week, yes, I could do that. I could pull out. Yeah, me too. Like, I am totally for it. I'm telling you guys. I don't know, probably I don't know, I'm getting older or something, or I don't know, it's just want to spend less and less time in front of the computer. And I want to move more, right? I want to have, just do all these activities. All right. So swing trading, like I said, why is it a wealth generation style? Because you don't have access to your cash right away. Because if you buy, for example, like me, you buy FedEx or you buy FCX and, you get in these trades, I can't pull my money out unless I close the trade, right? And that is when you're going to see the profits in my account. But if you want to work from home, like I said, you only need an average of 10 minutes a day to manage it. And I always do that, for example, in the morning. So I wake up, first of all, the first thing that I do is actually go to my portfolio, to my charts actually. And I want to see where I don't even go to my portfolio. Okay, I don't even, okay, so I don't go to my trading account. I go to my charting system, and I showed you guys the charts that I'm using, the software that I'm using. Do you know why I'm doing that? Because I don't want to be influenced by the P&L, because I'm such a P&L driven person. Okay. So for example, yesterday, I saw 100 points up in the Dow. I took the trade and I'm like, you know what? I'm going to wrap things up very quickly. So I took my 100-point Dow and, I trailed the rest for whatever. But it's like you're influenced by P&L, and type a 1 in here if you guys are not P&L driven. And I think it's it's a good thing. I mean, it's not a totally good thing, but because you're tempted to a lot of times to micromanage the trade. But hey, if you meet your goal, your daily goal, I think it's fine. All right, so how to select winning stocks, right? Everybody wants to have a winning stock. It's not rocket science, guys. Okay, you aim for good setups. Exactly. This is what you should aim for. And the reason why you need to aim for, and I love that you put that thing out there, is because it shows that you have to have patience, not only skill of knowing what to look for, but you need to have a lot of patience. Remember, no setup, no trade. No setup, no money. Okay. So if you don't have a setup, you should not be trading. Okay. So let's get to the basics. How do we select the winning stocks? How do we select the winning trades? It takes a proven strategy to select winning trades or investment. The stock needs to be fundamentally sound for long or medium-term trading, fundamentals in line with technical. So any kind of divergency that will happen between your entry point and your entry day is going to impact the continuation pattern, the velocity of the trade. So for example, now I'm hesitant in taking a long or a short in the market just because I know that on Friday we have option expiration, and we know that on option expiration, they love to kill their premiums, and they're either going to create a range bound market where the price action is not going to go with anywhere. So the options will expire worth less, right? Or they're going to take the market for a ride, to a roller coaster ride. How many times have you saw like massive sells that are happening on Thursdays and big buys that are happening on Fridays, or the other way around? Quite often. And another thing is that on option expiration, they love to pin prices at or around whole numbers. That's a fact for stocks and futures, indices and ETFs. So you need to buy stocks that are on sale. That means stocks that are on a pullback and that are reaching critical points on technical charts, support bands, for example. So when to buy stock? When certain events happen in the market. Like these events create the pullbacks. The pullbacks make the share prices go lower to a level that becomes appealing to the buyer. Right? So when you guys go at a dealership, well, not in 2022, but anyway, when you used to go to a dealership to buy a car or to lease a vehicle, right? You would go, you would check out the parking lot outside, you would select your preferred vehicle, whatever color, design, whatever options that it had. And you went inside if the salesman was not harassing you already outside, and you go, okay, what's the best price? And you would go like, you either had a Costco membership where you could get a discount, or you had a, I don't know, GM employee discount if you were purchasing a GM car. You were looking for some kind of deal, right? Because you wanted to buy it cheaper. Same thing with stocks, right? You want to buy them on a discount. You don't want to pay full price for that particular stock. So what are these events? Well, there are historical events like the year 2000.com bubble, the 2008 financial crisis, the 2016 election, and the 2020 pandemic. And believe it or not, this is again, we're reaching that decision point into the market where we may have some pretty good buying opportunities, like Apple, like Amazon, like Microsoft, like really good companies. So do I need these events really to get in? Well, yes and no. So make sure you leave room to add to the dip if you're an investor. So if you're an investor, obviously, if you're an investor, you do not have stops. Now I'm going to tell you another little dirty secret. Do you guys know that hedge funds do not use stops? Do you guys know that funds that have money allocated for some algorithms do not use stops? Stops are good and bad at the same time. I use stops, so just wanted to clear that out. But who's getting rich from all the stops? How many times have you guys seen that you put a stop and the price goes ding, it takes you out, and then it goes back up? Just type a 2 in the room and this has happened to you. So you got into a trade, it was running up, and all of a sudden, oh my gosh, it pulls back, it runs down, and boop, it takes you out. Well, here's another dirty little secret. Brokers, just like my broker, your brokers, all the brokers out there, I think it's a Fidelity. I'm not really sure. I need to check into that. But TradeStation, Robinhood, TD Ameritrade, Interactive Brokers, you name it. And if you're trading one of these brokers, just like I am, because I trade with TD Ameritrade, guess what? They sell the data. They sell your data. So sometimes in the trading room, when the market is a little bit thin, I tell my traders, please do not put a hard stop, because I don't want these institutions to know where we have our stop, right? Because we don't want to see the price ding and then go back up. Okay. Oh, there's a lot of things that I can talk to you guys about here that I share in the trading room. Is, oh my gosh, we're opening a whole a new can of worms in here. So the bottom line is that when the market is down or when it's heading down, all you have to do is relax, and all you have to do is like, yeah, come to mama, just pull back more. That is the time when you make a shopping list for stocks that are reaching the sale price or stocks that are on clearance. That's right. Think about all those stocks that ran without you. This is revenge time. And this is the time to put them on a list. And all you have to do is wait for a nice support area if you want to buy them, and then look for a technical pattern that will show you a precise buy area. So that means you're going to have an entry, you're going to have a stop. Having those two areas, you're going to be determining your position size, your risk level, so you can determine your position size. So with swing trading, is about following the footprints. It's about following the cycles. Institutional buying creates these cycles, create these moves. So you want to be in sync with these institutional institutions, right? Institutional buying occurs during strong uptrends on technical pullbacks. And these are actually named areas of accumulation. You have the buy zone that provides clear and buyable points. These are called buy pockets or sell pockets. Now, whether you're investing or whether you're trading, okay, these are the type of stocks that you're going to deal with. You have growth stocks, value stocks, income stocks, blue chip stocks, love blue chip stocks, and penny stocks. Now, penny stocks, I'm not going to say, hey, stay away from penny stocks, because, sometimes you have some kind of penny stocks out there that are reacting pretty well, but these are not going to be your primary follow, let's say go-to list, or, kind of like try to put them on a list. But you're going to go to more into the blue chip stocks, right? These are stocks of large, well-known companies with good reputations and strong records of profit growth. They are considered safe investments as they generally generate dividends. This is what you want, guys, because whether you're an investor or whether you're a swing trader, even if these are stocks that where you're not going to have many surprises in. For example, if you're trading a penny stock or a biotech stock, for example, I stay away from biotech stocks. You could have a lot of surprises. Airline stocks, biotech stocks, travel industry. If there's something happening at one point in time throughout the world, if there's one thing that is happening, the stock is going to go down. It's going to take the whole sector with it. So when it comes to trading, no one has a crystal ball, that's for sure. It just it's just work. It's 95% technical work and 5% fundamental. So you want to learn, if you want to learn my particular strategy, here it is. This is basically a trading plan. And if you want to respect this, you could, just do a snapshot of this slide, because this is how you're going to be selecting your stocks. Number one, you need a good history of earnings. You need 3 years minimum, or at least 3 prior Q quarters of earnings that beat expectations. Enter trades after post earnings results. Buy companies that have really good earnings and good sales. Buy strong stocks that are not going to be impacted by recession. They're not going to be impacted by pandemic. Then the other thing you need to do is look for companies that make a splash, that have new products, services, launches, etc. Right? Also, look for technical charts from the technical standpoint. Look at the trend. Look at the volume. Is the volume increasing? Because volume is very important on the technical chart. It's simple volume, right? Simple volume shows you how many participants are in the market in that particular stock at a moment in time. Or if you're trading futures, it shows you it shows you how many futures contracts are traded. So that's very important. Spikes of volume are very interesting, because you could have a spike of volume to the upside into resistance and spike of volume to the downside into support. Typically, when you have these spikes and when you have, I call them rocket bars, because they're unusually large and they carry high volume. Well, that's showing me that the move has possibly ended and a reversal is going to start very soon. And this is how I was able to identify the bottoming action in the SPYs early October. Also, you're going to look at the technical chart. Like I said, you're going to look at fib location. So you're going to have to do a little bit of more work. You're going to look at all-time highs, new lows for the stock, whatever you're trading. You're going to look for volatility contraction. You don't want to have huge volatility, because huge volatility is going to leave really wide range bars. And those wide range bars are going to create a lot of risk for your trade. The risk meaning the distance between the entry and the stop. And therefore, your position size is going to be way less for that particular trade. Positioning within the sector and index, whether you're looking at leaders or laggards, relative strength and weakness. So for example, if you're looking at semiconductors, right? So you're looking at the sector, you're looking at SMH, and you're looking at stocks that are under SMH, and you're, categorizing them to see which is the strongest. Because if you want to go long, for example, in a stock within the semiconductor sector, you want to go for the strongest one. The reason for that is super simple, is because that stock is going to outperform the market in general. It's going to outperform the sector. It's going to outperform the Qs, right? And it's going to run faster to your target. And this is your objective, right? You don't want to watch paint dry. You want to have the stock, or you want to have your index or whatever you're trading achieve target immediately. The other thing is institutional participation accounts for 85% of market volume. So you need to know how to look for that institutional participation. Of course, I check block trades, dark pools, etc., because I want to have all the information. All right. So now that we know all that information and how to scan for the trade, how do we enter? Okay, so when do we enter? So here it is. When to enter a trade, we focus on the cycle, the buy, the sell, the short, pullback, and select the optimum entry that will generate the best rewards, right? You're looking for entries. Entries are very important. And for me, entries are precise to the penny. An early point within a potential leading stock consolidation or reversal from a correctional pattern. A buy pocket or buy setup is a continuation of a buy point for a leading stock that is already firmly formed in a strong trend. This offers both a way to get on board strong leaders within the trends, and as well an extremely reliable and powerful tool for adding to positions, just like I did in FedEx and FDX. Initiated earlier when a stock was still within or just emerging from its original consolidation or reversal from the correction pattern. TradeOutLoud strategy looks to buy at the daily, and these are the moving averages that we use: 20 simple moving average, or 50 simple moving average, or 10 or 20 weekly simple moving averages, and this is institutional support. The stock needs to be correlated within the indices. So for example, if I want to go, let's say Amazon long, not only that I'm looking at the Amazon stock, because this is one of the biggest mistakes that traders make. They kind of have that tunnel vision and they just look at the stock. They don't look at the trading environment. You have to make sure that your ETF, your leading ETF, is in sync with your technical patterns. For example, if I want to trade Amazon, or if I want to trade Apple or Nvidia or Microsoft, I look at the performance in the Qs, and if I look at the patterns within the Qs and to see if they're trending, if they're not trending, and I want to see what the heck is going on with that technical pattern, because if it's leading and if it's creating a buy pocket, obviously, if I scan and if I decide that through my whole entire checklist, I find that Amazon fulfills all those criteria and it's stronger than the Qs, then guess what? Yes, that is a stock that I am willing to buy, right? Because it's going to start running faster than the Qs, and that's your objective. Now, for those of you that are investing, and I love, guys, investing. I talked a little bit about yesterday about investing. Guys, you don't need to have a whole bunch of money to start investing. You're going to start with $50, with $500. Just put it out there. Start putting your money to work. These are and pick wisely. I like to pick high dividend stocks. Why? Because I am getting paid to hold them. IBM pays $1.63 a share. Home Depot is my favorite, $1.50. TM, 3M, UPS, BMO, DUK, FedEx, loving it. FedEx, here it is, FedEx, 0.62, ETR, 0.93. You get a whole list. If you Google it, I'm pretty sure you're going to find all this information, and you're going to find out. You could do you could do a little bit of research and find out what are the highest dividend stocks and start investing in them. You can make money without lifting a finger. All right. So number one mistake in trading, traders that only look for stock picks will always be part of the 90% of the traders that fail and lose money. These are the traders that are looking at CNBC and they're trying to follow Kramer, and they're trying to, participate in discussions, I don't know, at the cafeteria, and say, hey, what stocks are you buying? Oh, I'm buying, I'm buying McDonald's. Okay. All right. So you must have a much deeper dive in order to succeed. Do your own homework. Ignore what's happening. You guys see how, and I've heard stories. I'm not going to give any names, but there's some funds that are on TV that are performing really badly. Oh my gosh, like double digits down. Well, I guarantee you that if you have the approach, and by the way, all of these funds are really long-term, so they don't really care that they're down double digits, because they're going to be looking at revisiting these positions 7 years later. But if you want instant gratification, maybe you want to go on that Cancun vacation next year, or in 6 months, or in 3 months. You have the opportunity to do that if you swing trade. Okay. The biggest component is understanding the trades. This generates confidence. This generates winning trades. And this is the skill that you're going to learn once, and it's just going to get better, just like wine, right? It's going to refine it. You're going to refine your strategies over and over again. Do not rely 100% on a service. Learn how to trade, because that's how you gain confidence. And then trade. Trading is recession proof. You can trade from home. You can make money while other individuals are waiting for stimulus checks or unemployment checks, or I don't know, having their debt paid off or student loan paid off, right? Well, this is not going to happen. 10 ways to generate income and trading and swing trading in 2023. Guys, get ready. We have about a month and a half left of 2020. And if you're looking at your P&L right now, or open up your platform and look at your P&L, what would your P&L tell you? Because if you have been doing the same thing over and over and over again, if your P&L is not growing, or if it's into the red, let's put it back into the black. Let's put it back into the green. Let's get ready for 2023. So number one, these are the takeaways. Let the chart do the talking and guide you through the trade, and be patient to wait for setups. Pay attention to technicals. This is number two. Number three, patience to wait for the pattern and the risk level. Remember, no pattern, no trade, no pattern, no money. Select the proper time frames for each style, short-term swing versus medium-term swing. Don't overthink. If you have to squint and look at the technical pattern, guess what? The trade is not there. Don't force it. Walk away or continue to scan. There are over 6,000 stocks there you could actually scan through. Become a really good technical analyst, and you don't need to have a PhD or be a math wizard to have that skill and to get that skill. Keep it very simple. Look for relative strength, relative weakness every single time when you trade. Go with the trend. It's always easier. Buying the dip is also not a strategy, guys. It worked last year, but it's not working this year. So there are some particularities in trading that sometimes work and sometimes they don't work. And don't be stubborn. Okay. And here's my game plan for you guys. I'm running out of time already. Zoom out to the bigger technical image. Focus on trend trades. Like to trade runner-ups into earnings. Do not hold swing trades into earnings, not unless you're doing options, because they involve a huge risk. So for example, if there's a stock that is going to report at the end of the week, I'm not going to buy it right now. So I'm going to wait until after it reports earnings. Why? Because I may have a surprise. I may have a good surprise and the stock may go in my favor, or I could have a really bad surprise and it could gap down like, I don't know, 20%. Don't overthink. Establish trading parameters. It's very important to establish your ESTR, your entry, your stop, your targets, and of course your position sizing, and use the same size on each trade, guys. Have a precise trailing plan in place. Assess the odds, the risk, position sizing. Remember, if you're always oversizing for your trade, you're going to have a lot of pressure. You're going to mismanage your trade, and you're going to feel the heat. Number one advice, if you cannot stand the heat, stay out of the kitchen. So do not oversize in your position. That is when most of the mistakes are being done. And also scale into targets. Once you hit one of the targets, just scale out a little bit. And then if the price pulls back and it's giving you a buy pocket again, you can add back in again. Here are some of my rules. Number one, environment, high risk or low risk. Evaluate it. Is it a high risk environment or not? Now, what do you think? Friday's option expiration. Do you think that's a high risk environment? Of course it is. Pay attention to seasonality. Seasonality is very important, plays a major role into trading. Also, earnings, right? Don't buy a stock that is, has pending that has earnings upcoming in the next 2 to 3 days or even a week. Be diversified. Don't put your eggs in only one basket. So for example, if you see like a beautiful setup in Bank of America, and you see another one in Goldman Sachs, and you see another one in Citi, you see another one in Morgan Stanley, just pick one. Don't take more financials. Follow the overall market and industry group. Pick relative strength, weakness based on market. Do not get out of a good trade unless the market takes you out. Trail it. You saw my trade in FCX, and I said that I'm going to trail 37. I'm not taking myself out of the trade, even if it achieves target. Yes, I will scale a little bit into that target, but I'm not going to take myself out of it. This is the biggest mistake that a lot of traders make. Okay, my time is up, but I have a little bit more. I have some more. I have just one more slide of rules. Trade stocks that have good, reliable volume. Look at the volume increase and see if the volume increases within the last 2 to 7 days, because that is a sign of institutional legging in. Trade stocks that have a good pattern of beating earnings. Look for fundamentally strong and solid stocks. Ideal to trade stocks that are trading above the 20 and the 50 SMA on the time frame that you're trading. So whether you're trading the daily chart, weekly chart, you want to see the price that is escaping the moving average web. And look for stocks and ETFs that have at least 1 million shares a day. This is my rule, right? These are all my rules. I mean, you can take advantage of them and apply it to your trading, but these work for me. Okay. And then sharp pivots have an increased risk of failure than rounded bottoms or consolidations. That's why I love I love these rounded bottoms. And in fact, if you look at FCX, we have been talking a lot about Freeport McMoran. It has like a really long consolidation, right? All right. So if you guys want to turn 10 minutes of trading into 5, 6, or 7-figure trading account, remember, you need to be educated. You need to know what you're doing. Then you can fund the account, have a trading plan, do your homework, execute, never chase, because when you chase, you're always behind the price. Mind your risk, position size appropriately, and use the same risk on each and every single trade. Trail into targets, let your winners run, and cut your losses, and always be aware of market conditions. So if you have a desire to make trading work for you, if you want to transform your hobby for the markets, your passion for the markets into profits, you could actually do that. I could work with you. We can teach you how to trade. We are going to teach you a full system, whole-blown system. We're going to teach you how you need to focus, develop a skill by following my trades, following winning trades. So it's a system where not only that I teach you how to trade, I also provide you with ideas of how and what trades and where the entries are, because a lot of times, traders, a lot of the mentors out there and a lot of teachers, what they do, they say, oh, I'm just going to teach you how to fish, right? And you need to fish for yourself. Well, guess what? It doesn't come that easy, because I have been there, and I just wish that I had a service, this kind of service that I offer for my traders, because this was my number one objective, to develop, and basically I didn't even think that I would ever teach trading in my whole entire career. But anyways, if it was to create a service, I wanted to create a service where you would profit and learn at the same time. So you're going to achieve incredible results if you know the system. So I don't care if you're learning it from me or anywhere else, as long as you're aware that trading is not about entries, it's not about stops, it's not about a strategy, it's not about a pattern, it's about a whole system. So the reality is that trading is about how you put everything together. And not only that, but how fast you can put everything together, especially when it comes to day trading, right? So Wealth Generation Swing Trading and Active Investing course. We have a course that is coming up in January, and we have a super offer for you guys. We're going to teach you how to trade like a hedge fund. My results are transparent, are on the website. This service that we're offering and this course, we started with this, I think it was 11 years ago. That's right, 11 years ago. Okay, so the Wealth Generation course is going to be live. We're also going to be providing you guys with the on-demand recording, so you can view them anytime you want. You're going to have access to a 400 plus page manual. It's actually 475 pages right now. We're going to provide you with a platform layout. We're going to provide you with risk sheets. We're going to provide you with unlimited support, and so much information is ridiculous. So if you are ready to take the jump and say, hey, I want to get ready in 2023. Okay, this is the 5-day live course where we're going to teach you how to scan, how to select stocks. We're going to teach you technical analysis, when to enter trades, how to use indicators that are super simple. And not only that, but they're free on every single platform. We're going to teach you how to trade stress-free, and also how to apply damage control when the market is acting really crazy. So if you guys want to learn more about the course, I can send you the curriculum. This is the curriculum that you're going to be getting, and you're going to be taught live. So the class is on January 9th through the 13th, and just for today and for Black Friday. So the deal is going to go away on November 27th. And I think by then we're already going to have all our spots filled. But we're going to be offering you guys free access to the Stock Swing Trader 1-year membership that is valued at $2,400 that is going to come for you for free. This is amazing. Just look at the performance of our portfolio. It is ridiculous. Or if you guys say, hey, you know what, I have the trading education. I think that, I have what it takes, but I just need a little bit of help, finding, the entries and just following somebody along until, I'm up to speed. We do have the Stock Swing Trader. And again, this service has been around for 12 years, guys. 12 years is the first service that we had along with the class. This is called the Stock Swing Trader, and this is a newsletter that you're going to be receiving on Monday. It's going to be a full-blown market analysis. It's going to teach you how to, it has the work already done for you on what you can expect through that, for that week. It's going to provide you with an economic calendar. It's going to provide you with all the earnings, what you can expect from the earnings. So this is a service for self-directed traders, and we will show you how to navigate the markets without being chained to your computer. Like I said, you have full market analysis. You have the trade time horizon for swing trading and investing. You have access to real-time portfolio. So I don't know, David, if you're going to allow me to spend like one more second here. Okay. All right, let me see.
Sure,
okay,
go ahead. Yeah, you're the last presenter of the day.
Okay,
So,
okay,
yeah, take as much time
it's
as you
only
need.
going to be like 2 more minutes anyway.
Okay, no problem.
Okay, so this is the performance portfolio, guys, right here. So you're going to have all the trades that are going to be timestamped, and you're going to see, all the returns for all the trades, etc. And here at the bottom, we're offering funding. So by the way, if you guys say, I don't have the money, I wish I had the money to swing trade, I wish I had the money to day trade. Well, guess what? We're offering you guys funding. All right. So if you want more information, you're going to shoot me an email at info@TradeOutLoud.com, or you can visit our website. It is TradeOutLoud.com. You can find more information about that. But yes, we're offering funding. You can have a $50,000 account, and you could actually go for a $500,000 account. Like I said, if you're interested, shoot me an email, or you can go to our website to find out more. We're offering you guys position sizing. So we have a calculator for you guys right here. Here it is to make your life super easy. So for example, you want to risk $1,000 on a trade. If your entry price is $80.10 and your stop price is 77, it's going to tell you exactly how many shares you can buy. We're also providing guidelines, about entries and about everything. This is so much more than a service. This is the P&L Explained. We're providing you with my platform layout if you're trading Thinkorswim. Details about order entry here. There's a short video here about order entries. You have the holidays over here. You have option expirations here. You have charting. If you want to use the charting, you can see it right here. You have year-to-date performance. We're still up 123% on the year. And I'm not kidding you guys. I'm not kidding you guys. This is so, so good. So if you guys are interested, like I said, go onto our website and take advantage of this. This is what you're going to get. This is the stock swing trader. You're going to get the weekly outlook. You're going to get trades whenever they're setting up. Sometimes you may get 20 trades. Sometimes you may get none. Sometimes you may get 2 trades. It all depends on how the market is setting up. So plus, if you join, you're going to be able to eliminate the extra costs that are associated with all this research, right? Subscription to scanner. Yes, I use a scanner and it cost me $3,200 a year. I use news subscriptions. Yes, I do. And that's $1,750 a year. You're able to eliminate the noise. Plus, I'm doing the work for you. You're eliminating the money manager's fees because you're going to be trading your own funds. So I sift through all the noise to deliver what is essential for you guys. So if you're interested in the stock swing trader, that's, what it's all about. Just don't hesitate. Just try it out for a month and see if it's for you. All right. This is it, David. Thank you so much for having me here today.